welcome to Casual Conversations with CrossCountry Mortgage. Today we are spotlighting First American Title, and this is Susan Pastoor who's joining us. We're going to go through a variety of questions, covering quite a bit of territory and a bit of ground as it relates to title. And title is not something that is often talked about. It's kind of in the background. We see it on our HUD settlement statements and a variety of things, but we want to cover some of the questions as it relates to what is title and how does it work. So, Susan, thanks for joining us.
Thanks for having me. I love to talk about title. It's very exciting.
Well, you know, and
It is.
and to get into this, you know, not a lot of people are familiar with it. We hear about it.
Yeah.
But what is title? What is the form of title, and then what is title insurance?
Okay. It's like the Oz behind the curtain. The way that I explain it to people is that if you're buying a house from me, you're also buying all of the liens that I have on the property. If I have a mortgage, if I decided I didn't want to pay my taxes, if it's there's been a death or a divorce or any liens of any kind, and for title insurance, we clear that up. So we give free, clear title to the new buyer. So when you buy that, you know, hey, Aaron is the owner of this property. Nobody's going to knock on your door and say, hey, I was owed $50,000 from that sale. We clean up any stray interest. So yeah, title is the conveyance of property from one person to the other.
So you mentioned you clear that up.
Yes.
What does that mean? Like, what are you doing when you're clearing that up?
Oh, I love to talk about this. So when someone has a purchase agreement, I'll use buy, sell for example. So if somebody is buying a property, the purchase agreement comes to First American. We then examine that property address. So someone's lived in that house previously, unless it's brand new. Probably multiple people have lived in that property and or on that land. So what we do is we research the records, the Register of Deeds. We actually have a title plant that even before everything was online, we have copies of all of the deeds and the documents.
Okay.
And before that, they're in the big leather-bound books over there.
Yes.
And we research to make sure that title passed from this person to this person to this person. Any liens, as I mentioned, mortgages and taxes are very common, but so are divorce decrees and death certificates and siblings who might have interest in the property. So we create a document that says, hey, in order to give this property from Sue to Aaron, these are the things that we need to address. Does that make sense?
It does. And so does every property have a chain of title or a title work?
It does. And so
Okay.
I say to everybody, so I live on the southwest side of town, that whole quadrant by Byron Center, Manelli's, and the hospital over there. I moved in 18 years ago. That was all farmland. So pretty much everywhere you look, you go back 100 years or 200 years, every neighborhood was farmland. And then it was segmented into parcels, and then it was segmented into neighborhoods, and then it was sold off. So everything has a history.
Okay. Well, so then based on the type of property that I have or I'm purchasing, are there different types of title that I would need?
So the title is the same, but there's two things basically: residential, personal property, and commercial. But in a transaction, if there's a mortgage, so CrossCountry Mortgage sends us a deal, you are lending on this particular deal, we're going to give a mortgage policy to make sure nobody comes back to you and says, hey, we lent them $400,000 and there's all these liens. And then the seller gives the buyer an owner's policy. So there's an owner's policy and a buyer's policy at the same time. We get that question a lot.
Okay.
One is for the mortgage side, one is the seller giving free, clear title to the borrower. We do them simultaneously and clear those liens and put them in first lien position.
Okay.
Yeah.
Okay. So when I'm looking at a property then, what are the different ways that I can actually hold title on my property?
Oh, it's a good question. It's a good question. If anyone's watching this
Yes.
at this point. So if someone's going to buy a property, you can do tenants in common, meaning these two people, you and I decided we wanted to buy a cottage together. Your family's going to use it, my family's going to use it. We're 50-50, which means if something happens to me, my 50% goes to my heirs.
Okay.
Okay? Or joint tenants with 4 rights of survivorship, where we would buy something and then if I pass away, the whole thing goes to you. There's so many implications, and I really want to reiterate that in a marital situation, just because you're married, you now only the person who is taking title and borrowing on that property, you can buy individually, is what I'm saying.
So dower rights
they're gone.
Okay.
And so we see this a lot of time. One person in the spousal relationship is the primary credit holder. They have the job and the credit. Maybe one is at stay at home, or it's just varies, which is fine, but you need to let your mortgage company know, hey, we both want to be on title. So one person can be the primary mortgage holder, and then we execute documents such that one person is the borrower, but both are in title.
Okay.
That's really important.
So those are the primary ways to hold title.
Yep.
Is there different ways of holding title as it relates to the property? So if I'm buying a primary, a secondary, or an investment property, are there different ways to hold title there?
It's the same thing. On an investment property, again, you could be buying with, 3 other people, and it just, I know you're going to get to this. Like how...
Go ahead. Okay,
so what happens when we had this the other day, someone owned a piece of vacation property, and they owned it with there were 4 different people, and they were all tenants in common, meaning one person passes away, it goes to their heirs. This was about 50 years ago. We now have generational siblings all in the downline, that the way that that's executed, everybody has to sign off on that property.
Oh, okay.
It's a mess. But it's just really important to talk to somebody, like based on your individual situation.
So, you covered that story. Is that one of the risks of holding title incorrectly?
Correct.
Are there other ways? Is there other risks
Correct.
that somebody would incur?
Correct. In a family situation, I had a small panic attack. I did a Con Ed last week, and a gentleman raised his hand and he said, I have an older gentleman. They have, I don't remember, 9 or 11 kids, and they didn't want to put it in a trust. They didn't want to have one trustee. They have all 11 as equally. Now, you can disperse your wealth amongst 11 people with one signer, but they weren't comfortable with that. It makes me anxious. That means that one person could be in California, one could be here, one could be, and on the purchase agreement, on the closing documents, all 11 people have to be there, which that's awful. It's not good for, it's just not good.
Yeah.
It's not efficient. It's not great. So, yeah.
But you mentioned a trust. So can title be held in a trust?
Yes.
Okay.
Yes. And for those who don't know, quick rundown, a trust just says, hey, there's this document. This is, I'm spelling clearly that my house is in that trust and any bank accounts, so that if my husband and I were to die suddenly and it's in the Sue and John Pastoor trust, there's a trustee. The very next day, my brother could list our house. He could have access to our accounts to pay for funerals or whatever. Otherwise, you have to go through probate court.
Yeah.
So when people say, hey, I want to buy this house and I want it in my trust, we just need to see a copy of that trust, and everything needs to be signed as trustees.
Okay. I close on my property and I select a way of holding title. Mm-hmm. What happens if shortly after I close, I want to change the way that I'm holding title? Is that a possibility?
It is a possibility. Oftentimes people they're going through so much when they're buying, right? And they don't know, and they say, oh, I didn't mean to take tenants in common. With my wife, I wanted to do joint tenants of full rights of survivorship, or with my friend or spouse. That would be executed by a quitclaim deed, and generally an attorney for $200, $250 will say, I'm going to transfer this to here, and it gets recorded.
Okay. Now you covered it, and I think you covered it mainly, but just to circle back, what are some of the things that First American Title makes sure to clear and make sure that I'm protected when I'm going through this process? What is it that you guys covered to ensure me as the buyer is free and clear in getting this property?
That's an excellent question. The common things, as I mentioned, are mortgages that are being paid off. Sometimes people have 2 mortgages. They might have a line of credit as well, and then they think, oh, but I paid for a wedding with that. I wasn't thinking I needed to pay that off. So we're clearing those. I mentioned tax liens, death, divorce, but some other things. When people do remodels to sell, so if you bought my house and I just did a $20,000 bathroom remodel, if I partway through was irritated with my contractor and said, I've only paid him half, I'm not paying him anymore, and you buy my house and I didn't get, it's called a waiver saying, hey, they've been paid, all of those renovations, all of those types of things that are done, they're like little mini payoffs. So we ask for sworn statements and waivers. That's come up quite a bit. People have done a ton of remodeling over the last couple of years, and with COVID, if they're staying in houses, and then so things like that. And other people in title. So if we see Jim and Jane were on the deed and now just Jane is selling, what happened to Jim? So two things. There was either a death or a divorce. We have to see that to make sure that that person is paid off, and or we record their interest being extinguished.
So in your role then, and in First American, we're going to switch now from title work and title
Yeah.
insurance now to closing.
Yeah.
So what does First American do in the closing process?
Okay. And that is a really good point, is people sometimes think we're an insurance company, but what people see above the water is just the closing process. So all the stuff we just talked about is this clearing here, and then we get, okay, all of that's good to go.
Yeah.
Come on in, Erin, you're gonna buy and close on your house. We take the contract from the realtor, we take the contract from the mortgage company, all of your terms, we put it together. Then the agents will say, oh, well, there's a homeowners association. We look that up. We're just building on, there's a roof repair. We are the ones creating that ultimate end contract, debits, credits, that this is what we agreed to on the mortgage side, and on the real estate side, we create those documents. We take your loan documents, and the people come in and sign. And when they're done, they are the homeowner. We get everything recorded and we make it official.
I just thought of a question as you were talking about that, going back to what you mentioned prior to that. You talked about making sure that liens were extinguished or taken care of.
Yeah.
Can you just cover tax liens really quick? What's the importance of clearing a tax lien on title?
So the government is always in first lien position,
Yes.
as you well
Yes.
know.
Yes.
So if I decided this week that I was mad at the government and I'm never going to pay my property taxes again, fine and dandy. But when I go to sell my house, they are going to have a lien on my house, meaning all of my back taxes, whether that be for 1 year, 3 years, whatever years it is, with huge penalties. So if I have a mortgage for X amount of hundreds of thousands of dollars and I have a tax lien, the tax lien is paid first and then the mortgage is paid when the deal is closed. We get a payoff from the IRS or the state of Michigan, exactly like we would a mortgage company.
Okay. So in a prior video, we covered tax liens and the importance of making sure that your escrows are paid and setting that up in the video, just talking about the importance of escrows, making sure your tax liens are taken care of, and this is the exact reason why. So coming back now to closing. So when we talk about closing, if I'm walking in now, what can I expect at my closing when I'm coming into that?
Well, hopefully by that time, it's a celebration. Like all of that's a lot leading up to the closing, right? I mean, the mortgage process and looking for a house. We know this market is hard for buyers. So by the time you're done, really, it's the execution of final paperwork. You're going to come in, you're going to have a closer who's going to introduce themselves, explain these documents. Feel free to ask questions if you need to. But in the end, it's the finalization of the contracts. And it's meant to be a celebration to say, okay, and when you're done, whew, I'm done. Sometimes they get the keys at closing, sometimes it's coming a week or two later, but that's it.
Gotcha. Okay. So when I'm looking at doing this, and I'm going to come in and close on my purchase, and I owe, let's just say it's $10,000. Mm-hmm. Can I write a personal check to come in and close that out?
No. So that's from the seller's side. Okay, it's an excellent question because sometimes people think, oh, I have to pay my mortgage off before I close. That happens at closing. So if you're selling your house for $400,000 and you have a $150,000 mortgage, we send those checks directly to that mortgage company. We get a payoff authorization from the current owner. They give us their information on there. Hey, it's with Chase Bank. Here's my account number. Yes, tell Susan and her team how much we owe on October 25 and with interest, and that's the check we send out.
Okay. So, but if I'm going to close as a buyer and I'm bringing money to that table, I also can't bring a personal check.
You can wire or you can bring a cashier's check. We don't take personal checks. If there's a discrepancy, like a couple $100, like, we will work with that, but not for hundreds of thousands of dollars. And we don't take cash. We have had a couple of people ask. It's like, I do not want to be responsible for that, but no.
Okay, so if I'm going to be purchasing a home, when does that loan fund and when do I actually take and control that property? I know a lot of it depends on the contract. They say, hey, when you get possession, but assuming that everything is that day, does that loan take place and when do I start in that process?
That's good too. So we do a lot in Grand Rapids and West Michigan and Michigan in general, split closings. So a seller might close at one title company and a buyer might close at another title company. So you're buying, once both sides have executed and signed, we send the documents back and forth if it's not at the same company, and all monies have been collected. We then scan the documents into the mortgage company and say, hey, CrossCountry Mortgage, did we do a good job? Which means, hey, do you see that the mortgage is executed, notarized, and we send that back and we get the blessing to fund that. And everything goes out. If it's earlier in the day, it goes out that day or within 24 hours.
Okay.
But as long as we have receipted money in our hands, executed documents on both sides, keys can be exchanged, and then the deal is funded.
And so that's great on a purchase. Now, refinance, what is the difference between that and a refinance? Now, when does that loan fund and when do I get my check if I'm getting cash back? Or what happens after the payoffs are there? Do you guys send those checks? What am I responsible for?
Yep. So on a refinance, which there's been tons of, right? The rates are amazing.
Yeah.
If you haven't refinanced, it's my little plug, you really have to. It's I mean, I can't believe some people tell me they still haven't refinanced. I'm like, it's like free money.
Yeah,
it's incredible.
Yeah.
So on a refinance, the government gives 3 full business days. Basically, that's to say not too much of a history lesson, but we were there, the recession.
Yeah.
There was some unfair lending practices. And so after that came this 3 full days of, lots of things, the CD disclosure, but the 3 full days of rescission just means, hey, your borrower can look things over and go, yes, this is what I agreed to, this is what I want. And then once those 3 business days elapse, it's funded and the check can go to the client. And as far as if they're paying off personal debt, Home Depot, if they roll that into their refinance and they want to pay off some credit cards, those go directly to the client. So we will take their statement if you've organized your loan such that they're paying off some of these. They will get the checks and they're responsible because we don't know between the time they took application and the day of closing what they've spent on those.
And what the balance is on Okay, that's great. So that's some good information not only from the title insurance standpoint and the closing. Do you have anything else that you want to add to this that are some highlights or some questions that you get frequently?
Well, the biggest one is people will say, oh, well, why do I need title insurance? And I just think if you're going to buy the biggest investment of your life, one, your mortgage company is always going to require it. And there's a million stories of things that happen. Would I want to buy a property from somebody if I knew that they hadn't paid their taxes, that they hadn't paid their mortgage? Do I want to take it on a handshake? And then have somebody come and say, oh, did you know you don't actually own, we didn't even talk about boundary lines, like those 20 feet. Well, I thought I was buying that 20 feet. And it's like, no, you're not, because you actually closed on X legal description. So just do your due diligence. It's a one-time thing, unlike any other insurance and closing or any other kind of insurance. It's a one-time payment. and you're insured for the life of the time that you live there.
Great. Well, we really appreciate your time today, Susan.
Thank you guys. You guys are awesome to work with. We appreciate you very much.
Well, good. And if you've enjoyed this video and you have questions or comments, please feel free to fill those out online. Click on the like or subscribe button so you don't miss out on any future updates. We look forward to talking to you next time. Thanks.